All right. I think we're in business. Okay, just doing a sound check. Can you hear me? Okay, I seem to not be able to hear you, Brian. I don't know if it's my side. Oh,
You better.
okay. Something's coming through.
Perfect. Yep. Just had to switch it over to my headphone mic here, but we are good to go. So, how are you?
Awesome. Oh, yeah, good, good. And how are you doing, Brian?
I'm great. I'm great. Obviously, it's been a rough time for the markets, but
Oh yeah.
personally, did well, and we've had a great time kind of analyzing everything that's been going on with the crazy roller coaster that we've
Yeah,
seen over
yeah.
the last couple of 7 months or so now.
Yeah, yeah. It's definitely a lot of pain right now. So, okay, so let's get started. Look, guys, welcome to Future Proof. Today's Thursday, the 9th of June. It's probably still Wednesday, the 8th of June over at
Yep.
so a good evening to Brian and a good morning to us in Asia. Okay, so hope everyone's staying well and staying safe. Again, we have Brian Quinlivan from Santiment. A big and warm welcome to Brian. It's been a while. We kind of skipped last month, and that was my fault.
It's quite
um,
all right.
and we're glad to be back. All right. So I think we've done a mic test. I can hear you well. You can hear me well. Um, so today, we're changing up the format a little bit, right? So let's see how we go with timing today. Um, Look, guys, we'll jump straight to it, but today we're gonna before we get into it, I'm just gonna quickly share this. Okay, look, so whatever we talk about today from here on out is not financial advice. Do not take it as financial advice. We're just having a chat. It is just educational, and so yeah, don't if you're gonna make any financial decision, consult with a financial um, advisor. Okay, I'm gonna remove that, and okay, Brian, look, over to you to do a quick intro, and then let's jump right into it.
You bet. Yeah. So I'm Brian from Santiment. I've been with the team for about 3 years now. Started more on the marketing end, and I've kind of merged more toward the content side of things over the past 6 to 8 months or so. Uh, and my job is to kind of analyze the markets, give updates on what our data is showing. Obviously, for those who don't know what Santiment is, we update on chain and social analytics and look at alpha based on what's coming in and what kind of bullish and bearish divergences are showing right now. And there's quite a bit to dig through. So I'm more than happy to share my screen here, and we can jump right into it, Andy.
Yeah, let's do that.
All right.
Awesome.
So let me know if you can see this okay.
Yeah, it's just coming up, and I'm about to add it to the stream. Um, Wait. So I think you've added this. Yeah,
Should
there
be
you
right.
go.
Hmm.
Yep, perfect. Here we go.
Okay. So today's update is going to mainly be around the stablecoin craziness that's been going on for the last month. Going back to early May, for those who don't remember, it's just been about a month since the Terra Luna collapse. And there's been a lot of speculation as to why. The funding moving out of the main accounts, Luna itself having a big Bitcoin chunk that they sold off. And of course, Terra USD, which is the associated stablecoin, saw a major depeg from $1. And that caught a lot of people off guard. And the associated coin, Terra Luna, was unfortunately seeing a quick collapse and demise after that happened. It's, of course, dropped 99.9999% or so since its all time back in mid April. So, just about 6, 7 weeks ago, things were flying high for Luna. And now it's basically a dead coin, according to crowd consensus. So, we're going to look at Terra USD in just a moment. Before we do, we'll actually take a look at Tether, which went through its own craziness about 3 weeks ago after Terra USD depegged from $1. Tether had a depeg of its own, and that's a much bigger deal because this is the top stablecoin in cryptocurrency that a lot of people move their dollars to in order to feel safety. So when the safe coin goes from $1 to 95 cents over time, that causes a great wave of panic. And we saw that this wasn't just regular traders. Whales saw a huge degree of panic as well. And you can see how they just absolutely got rid of a massive amount of Tether's supply that they were holding on to, just about 5% or so, holding about 35% up here in early May. And then by, it looks like the first week of June, just a few days ago, they dropped down to about 30.5%. So give or take a 4.5% drop in all of the Tether available on the Tether blockchain that was filtered out of whale wallets and into smaller wallets. So that is a concerning sign for the top stablecoin in the world. And we can take a look at what happened, where that money actually went, where whales are parking it now. I'll tell you where it hasn't gone, and that is to the UST, now known as USTC address, or I should say, the USTC supply has also dropped, just like Tether, from the whales perspective. You can see here on May 1st, they were up at about 58.9% held of all UST, and then they dropped all the way down to 19.6%. So they obviously did not want to hold on to any UST that was essentially a fraction of its price and no longer depegged to $1. It dropped down to 29 cents at one point, got back up to 50 cents. And I can actually just click unlock metric, and it'll now show me the USTC price, which is down all the way to 0.0009622 cents. So
Wow.
it's just a
That's
non-existent stablecoin at this point.
yeah.
So basically, USTC and Tether were both widely impacted by their respective depegs that happened in May. Tether looks like it's recovered. Obviously, that would be a huge story if it wasn't. Still slightly down. You can see it was right up around $1, and now it's sitting at 99.9 cents. Take that for what you will. But UST slash USTC, there's just nothing there. So pretty fascinating, right, Andy?
Absolute destruction of value.
Yeah.
And I have to say, this was of all the crypto crashes that I've seen or experienced, this one's by far the largest and the fastest that I've seen happen.
Yeah, I can't remember a single time. I mean, obviously Terra Luna as well. They both
Yeah.
crashed together, but in recent memory, I can't think of anything like this.
Yeah.
Terra Luna was, I believe, like the 6th or 7th largest market cap asset in the world right before its crash. And if we look at like what the whales were doing, what is the price now? I mean, now it's down to Oh, I see why. It's because we're showing Luna 2.0 data now, so I won't even be able to
Okay.
demonstrate it. But Luna 1.0, the whales were looking the same way. They actually all dropped out in advance of the dump because the big whales were the ones holding all of the supply that was eventually dumped. So they were planning already to get out of it. And that foreshadowed that something pretty funky was going on with Luna. But
Yeah.
yeah, we can also take a look at where the stablecoins went, those Tether and all the Terra USD. Here's USDC, known as USD coin, widely used on Coinbase, among other top exchanges. We see a monumental rise that was actually starting all the way back on Valentine's Day, about 3.5 months ago. They were holding, the address is holding anywhere between $100,000 to $10 million. We're holding about 22.1% back on this date. Got all the way up to 31.4% just under 3 months later. So they jumped and added about 9% of all of the USDC supply, which is, as you would imagine, pretty significant. And it really took off here, which is when the UST and Tether began to get dumped pretty quickly.
Massive. Yeah.
And then the other coin would be DAI around the same time. The multi-collateral DAI token, which is very often associated with Ethereum, major upswing going from 22.6% all the way up to 33.1% just in the matter of about 4 or 5 days. So this is kind of a good thing. It means that whales didn't just jump out of crypto and say, I'm not dealing with this falling sector anymore. They simply moved their stable coins. It's difficult to figure out exactly how much, but a very large sum of the Tether holders simply moved their stable coins from Tether over to USDC instead and DAI. And it's actually a good sign. I mean, USDC is pretty flat, but DAI, for Ethereum enthusiasts, they're actually starting to go down, which might mean that they're injecting it into owning Ethereum, which we can sort of check on right here. And we can just look at, let me show the Ethereum price instead. We'll go the 1,000 to 10,000 addresses, still going down. 10,000 to 100,000 was going up for a while, but after the big drop, they started dropping pretty big. 100,000 to 1 million, this is probably the most encouraging one. They've jumped up about 0.3% of all of the Ethereum supply, which is hundreds of millions of dollars. And then these are mostly just exchange addresses. So like the three main ones, if we wanted to merge them all together, would be the 1,000 all the way up to 1 million Ethereum addresses. And they're continuing to go down right now. So they were up at a peak of, looks like 60.9%. They're down to 59.1. So we want to be waiting on the Ethereum line right here to start rising a little bit. That would be a good sign that not only ETH, but a lot of the ERC20s are starting to gain some traction and move back in the right direction.
Yep. Yeah. Wow. So we've seen a lot of whales switching over from the UST stablecoin over to USDC and DAI, but then we've seen DAI sort of coming down a little bit afterwards. Yeah.
Correct. Yeah.
Okay.
So USDC is staying pretty stable. DAI is moving down. And
Okay.
Ethereum appears to still be moving down. For those wondering about Bitcoin, even though this is going to be mainly about stable coins today, Bitcoin, we like to look at three major tiers: the 100 to 1,000, 1,000 to 10,000 coin addresses, and 10,000 to 100,000. Now, this gold one isn't like the other two. We've seen a pretty big fall in the pink line here, 100 to 1,000, and the red line, 1,000 to 10,000. Both, I mean, if we zoom out to the last year, we can see they were both holding a lot more than where they're at now down here. However, ever since the initial dip that occurred in late January, the gold line's actually been going up. So a lot of the shark, I mean, they're all pretty much whale addresses because they're hundreds of millions of dollars, tens of millions of dollars. But the tens of millions of dollars are coin addresses are moving over to the hundreds of millions and even billions of dollar addresses that we see here. So that's not necessarily a bad thing, but we don't quite regard this gold line as quite as exciting due to the fact that a large percentage of these are exchange addresses that don't really reflect active traders accumulating or dumping their assets. So it isn't really a direct reflection of trader confidence.
Yeah.
So Bitcoin overall still kind of down. Go ahead, Andy.
Yeah. So where do you see the market right now, or where do you see it going from here?
Yeah, it's obviously been chopping for quite a while. A lot of our metrics have started to look a little more enticing. I can show you just a couple brief things on Bitcoin. Circulation is starting to rise. It was taking a dip here in mid-January, but it went from about 166,000 Bitcoin circulating per day, up to where it is now at about 212K per day. So that's very encouraging to see. Daily active addresses have been more or less flat, the amount of unique addresses interacting on the network. The MVRV, which is the average trading returns, in this case, we're looking at 30-day returns on average per trader. It was very, very low here, and it's actually risen into positive territory despite our line here, our price line staying pretty flat. It means a lot of people likely bought the dip here and did okay just based on this small rise, or they're going back to, you know, older times where prices were lower and they're beginning to take profit at this stage. But either way, we'd prefer that MVRV is down here, indicating there's still a lot more pain to be had. So considering it's neutral and even just slightly over 0% now, a little more risk now. Weighted sentiment is extremely negative, indicating that the traders are not believers of price being able to bounce. That's a good thing. It means that the amount of FUD right now and shorts that are going on can very likely add to, when the price goes up, be basically rocket fuel for the price being able to soar the way we're all hoping, and like we saw back in October and November. Supply and exchanges is also going back down after it was actually increasing on this huge plummet in early May. So that's good to see. We already went over whales. Exchange flow is pretty much neutral now. Network realized profit loss. We saw a few negative spikes here, indicating there was an immense amount of loss on the network. These are usually times where you can buy the dip. We especially saw big ones right here. That was right around the bottom. Development activity, pretty neutral at the moment. We'd like to just continue to see it staying afloat. You know, anything above 30 GitHub submissions per day, happy to see it. But Bitcoin really doesn't matter. We don't even really know the founder. So take development activity with a grain of salt, unless you know Mr. Satoshi yourself. Social dominance and volume is interesting. We like to see dominance be above 20%. And right now it's at about 18. So it's getting to where we're starting to, see some larger interest in Bitcoin versus just altcoins and S coins all over the place that people are shilling. Dormant coins are not really moving right now. Ratio of on-chain transaction volume and profit to loss is pretty neutral. Whale transaction count is actually moving down. We'd like to see it going a little more like this and see accumulation spikes like we saw at the beginning of the month. But yeah, that's telling us Bitcoin doesn't quite look like it's primed for a breakout, but it's stable enough with things like circulation and MVRV looking okay that it's hard to make an argument that it's going to plummet either. But of course, as Andy said at the beginning of this call, not investment advice, and absolutely anything can happen.
Yeah. So it looks like it's kind of just holding steady, isn't it? Like I've seen a pattern of it dropping down to, I don't know, 29, and then it'll go back up to 31,500, and then it'll come back down to
Lots and lots of chopping for sure. It's very interesting to see. Bears and bulls are definitely battling right now, and nobody really knows the answer, but lots of opinions are popping up all over the place. That's for sure.
Yeah. I mean, the way I look at it, I mean, what's happening around the world right now, we've got you've got the Fed that's increasing interest rates, right? And I think the goal is to increase it 10 times, right? 10x from where it was. So plus they're doing quantitative tightening, where they're going to reduce the supply of fiat currency. So I guess what's from a macro perspective, what's really happening is that a lot of money's flowing back into the U.S. And in fact, the U.S. dollar is strengthening against many of the other fiat currencies, which we can see. So it's an interesting time where, in the last 2.5 years where a lot of institutional and new money has come into crypto, and how quickly they move, right? How quickly they move, and it's almost in tandem with the tech stock that we're seeing here. Um, but yeah, it's really interesting. I mean, because if you think about it, Bitcoin was invented to combat uncertainty or uncertain times, like what we're having right now, and so the logic would be to actually accumulate Bitcoin in times of uncertainty, that like what we're facing right now. But it's interesting to see how the various holders or investors of Bitcoin are actually reacting to the macro environment. Yeah.
Yeah, completely agree. It's pretty shocking, and it's actually quite interesting to see that the S&P has started to separate a bit from Bitcoin, which has not bounced the way the equities markets have a little bit since late May. So there could be some room for Bitcoin to catch up. That would be nice to
Mhm.
see. Or the S&P may start to collapse a little bit, but Bitcoin may not move because it's a little bit of a bullish divergence against the equities markets right now after basically following them very tightly for the last 6 months.
Yeah, yeah. And it's interesting to see because in the last bull run in 2017, it was non-correlated, and now with institutional money having come in, it's become quite correlated
Hmm.
to the equities market. So that's
Right.
that's yeah, that's very interesting to see. Also, um,
So yeah,
yeah,
I know we're
yeah,
coming up on time, but a couple more things I just want to show really quick.
yeah.
This is showing the ratio of how much tether the top 10 non-exchange whales are holding versus the top 10 exchange whales. So top 10, just as you would as it's explained, any wallets that aren't associated with exchanges, the 10 largest, back here in January, they were holding twice as many, it looks like, Tether as the top 10 exchange wallets. But after this dip, look how that completely flipped on its head. And we
Wow.
saw a huge drop. And now it looks like 3 times more Tether held on exchanges compared to off by the top 10 of each respective category.
Wow. So, what does that potentially tell us, Brian?
I think more than anything, it's just trader confidence in the coin. When there's less confidence in the coin staying stable, as you
Yeah.
expect a stable coin to do,
Yep.
you keep it on an exchange for a quick sell if it comes back up, or a quick buy if it goes down. Maybe some people want to accumulate more in case Tether does this again.
Mhm.
Whatever the case is, it's showing a severe lack of confidence right now, which is a
Yeah.
concern. And it's very possible that all of crypto is dependent on Tether uh, getting back its reputation as a reliable stablecoin, because people may not want to go toward alternate routes, or they may not have them available on the exchanges that they trade them on.
Yeah. 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 That's interesting. It's
Yeah.
yeah. Yeah. Wow. What about yeah, the other stable coins?
Yeah, USTC, it doesn't look like there was anything. I mean, the axis is kind of skewed here
Yeah.
because this has been such a wildly much newer stablecoin.
Mhm.
But if I zoom in just to this area, starting from May 1st, it does look like there was a big flip flop. Uh, Most USTC is appearing to be on exchanges versus in cold wallets, so that's a big flip as expected.
Yeah.
Looking at USDC, it should look somewhat the other direction. Oh, interestingly, it is in the ERC20, but we don't seem to have. Oh,
Oh, I think you picked the wrong.
yep, there's two
Yeah.
of them.
There
So
you
let
go.
me.
There you
Yeah,
go.
so it looks like the big influx happened about 2 weeks before the Tether collapse, which is interesting. I really wouldn't be surprised if there was some insider information of
Yeah.
something being foreshadowed with Tether's temporary depeg, because it got all the way up to 7 times more on the top 10 non-exchange whales compared to the top 10 exchange whales.
Wow. Wow.
And it did drop down back to about 2.25. It's still fluctuating pretty wildly, but this is a pretty good sign. I mean, 5 times, 3.5 times as much. Clearly, there's plenty of confidence that the non-exchange whales have here in USDC. And then just really quickly to look at DAI. Not quite as expected, to be honest. It looks like a lot more coins have dropped than they have risen. Up until recently, they started to rise, but before that, I mean, going back to mid-February when it was at a peak of 28.5 times more on non-exchange wallets. That could be just the nature of DAI because it's more connected to DeFi and stuff.
Yeah.
But yeah, it had a pretty big drop. But even still, this drop shows there were 9 times as many. So take that with a grain of salt.
Yeah. 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 Okay. Wow. Okay. Hey, so Brian, thanks for sharing
Of course.
these insights with us, especially with what's happening in the stable coin space and what where we see what the whales are doing with their stable coins. So
Sure.
obviously, the confidence is low right now, and everyone's probably in a wait and hold and wait situation to see what happens next, or maybe they're waiting for Jerome's next announcement and what he's going to do next.
Yeah,
So yeah, so everyone's kind of sitting on the sidelines.
I agree. Yeah, it's going to be a very interesting second half of 2022. I can guarantee that. Um,
Yeah.
and the best thing to do is just keep an eye on average trading returns, funding rates, whether they turn super bearish or super bullish. That's going to dictate a lot. Um, Whale behavior, like we just showed today, all are going to factor in a lot to where markets go toward the second half of the year. And of course, its relation to the S&P 500. So we'll see if equities are starting to look better. Do you have any, with you tracking equities a little more than we do at Santiment, have you
Yep.
seen anything showing one way or another about where stock markets might be going?
No, not really. I mean, I think the whole world is watching on because really right now it's the Fed, trying to tackle inflation, and
Right.
so but what's different this time with the inflationary pressures is that it is not demand driven, and
Mm-hmm.
so the tools that Jerome is using to tame inflation, it usually works best for a demand driven type of inflation. Because of the pandemic, this is a supply side driven or supply driven inflation,
Right.
because supply chains were broken. People couldn't get to work, so they couldn't manufacture stuff, so there's a shortage of supply the world over. So being a supply driven inflation, I don't know how well the tools that he's using is going to tame inflation down. The concern is that one will go into stagflation, which is even worse than a recession. At least when you're in a recession, you can kind of build yourself out of it. Is a destruction of the world economy, right? A
Mm.
destruction and a reset, right? Almost. So it's again, I guess we don't know what we don't know, but from our perspective, this is a supply driven inflation rather than uh, a a demand driven inflation. Because if it's a demand driven inflation, then that's fine, right? You increase interest rates, people spend less, and you cool down demand. But right
Mm-hmm.
now, it's supply driven. That there just isn't enough supply for the world, right?
Right.
So yeah, so I guess we'll see how what happens next.
Yeah, it's
But
going to
yeah,
be
that
interesting.
yeah, Yeah. But look, for you guys, for you viewers out there, look, hang tight. Don't lose hope. Bitcoin was invented for times like these, right? Um, just again, not financial advice, but if you had a long-term strategy of accumulation of Bitcoin and you were already DCAing into Bitcoin, you know, there shouldn't be any change, right? You shouldn't be affected by price. Your goal is accumulation of Bitcoin, whatever price. So don't lose hope. I still think that there's room for crypto as an asset class. It's But in the short term, that there's a lot of uncertainty, and when there's a lot of uncertainty, people tend to hold on to cash.
Yep.
So yeah, so investing activities aren't as bullish, but the market cycles, right? They happen. It's just that in crypto it happens a lot faster than
Much more often, yeah.
yeah, much more often. So get used to it, and enjoy the ride. It's scary right now. It's kind of like a roller coaster, but it'll be fun again.
Totally agree.
Any advice from your end, Brian?
I just recommend everyone try to stay safe. The biggest mistakes I see are people investing money that they can't afford to lose due to the communities they're in telling them that the price is never going to go lower and this is the biggest discount they're ever going to see, and then it goes lower and people get screwed over and can't pay their bills. And we just want to ensure that none of you are short-sighted enough to do that.
Yeah. So don't overextend. Make sure you have enough for your daily expenses, right? And keep the lights on, food on the table, roof over your head, right? That's all very important for your well-being. That's really good advice, Brian. And don't overextend. Stay safe.
It's that simple.
Yeah. Okay, so guys, we're actually trying out a new format. We're trying a much shorter format. We usually get straight to the point, and then we'll give you back your extra time. And I think we're close to it, aren't we, Brian?
Yeah, this worked out well. I think we hit on the main subjects. Didn't feel rushed at all, and hopefully you guys enjoyed it. Let Andy know what you guys think, and we'll try to tweak and adjust to make sure you guys are always feeling like you're getting your money's worth here.
Yeah. And also, guys, if you are new and you're tuning in, so on here, on the second Thursday of every month, I will have Brian on as a guest who will look at and analyze and share with you the on-chain metrics that's happening on the various blockchains. And so don't forget to tune in. If you want to be alerted, just follow us, and on Facebook, subscribe, click on the notify icon so that every time we come on, you get notified. And also, if like the market's pretty flat right now, it's a lull time. It's probably a good time to get educated. So if you are interested in learning about crypto before putting any money into it, which is always a great idea to know what you're putting your money into, just put class in the comment, right? And well, if you're on Facebook, we can definitely get in touch with you. If you're on YouTube, it'll be a bit difficult. But if you're on Facebook, just put class, and then someone will reach out to you, or you can search us up, Equities Tracker, right? And give us a buzz, right? Shoot us a message on social media, and someone will respond. We're always having classes. We're always trying hard to educate new investors or even seasoned investors, right? Because crypto is a pretty new asset class. So we're always here. Give us a buzz and educate yourself. So before you part with your money. Yeah. Okay. Thanks again, Brian, for tuning in. Time for some din din.
Din din time over here. I hope you have a good morning, Andy, and everyone else, and wherever you are in the world, stay safe.
Thank you, Brian. Have a good one.
Take care, guys.
Bye,
Bye.
guys. Bye-bye.